might start with Dave, actually, in terms of how critical would you say it is for even a small business to get cyber cover? I have heard stories sometimes that cyber cover for some businesses, they're almost too late in terms of premiums have skyrocketed. What's the current thoughts there?
Right. Before we talk premiums and cover, we always like to talk risk. I mean, what is your risk profile? What is the risk profile of your business that, as a broker, we would take to the insurers to try and transfer the risk from your balance sheet to their balance sheet? So the risk profile could be significant from high to low, all right? And so the insurer looks at those risk profiles and say, well, how is that business protecting itself, all right? So we much prefer a business actually be more focused upon eliminating risk than buying insurance. Interestingly, so focus on the risk protection measures to avoid a problem having where you've got to make a claim, all right? Then you facilitate insurance as a contingency. The insurance is the afterthought. And even that, you will not be entitled to cyber cover if your controls are inadequate. So you have to have good protection, physical protection in place first to entitle you to insurance. Now, I guess cyber insurance as a class has been evolving for the last 7 years, but exponentially over the last 2. And what that's meant is a lot of insurers have just shut the door on cyber, and then others have reopened. So now that things are becoming more robust and clear, but the vast majority of policies that are in the market at the moment are actually able to cover risks that the insurers aren't even aware that exist yet. All right. So the way they've been worded, they're quite holistic in their coverage and broad, but the risk that they're protecting is still yet to be created. All right. So they're continually re-engineering their wordings and re-underwriting with bigger excesses. We've got clients, for example, that pay a premium of $1,000, with a $500 excess, up to clients that pay $1.5 million with $1 million excess. So it depends on the individual risk profile. But it's a good question, Paul, because it starts with any business, any size, what is actually my risk? All right. And if you can mitigate that risk, because the insurer's risk profiles come down, or their rating metrics are very much about, well, okay, what are the controls in place? What are your protocols and procedures? And talking about, you bring your own devices and people working from home, all that's included. They're very comprehensive questionnaires. But then it also goes down to how many records are you storing? Because the loss will be, one of the covers is the restoration of those records. So if you've got 17 million records versus 100 records, it's going to be less of a risk profile. But the biggest cost, and sure, I mean, if you have to bring in a forensic accountant or a forensic IT person to rebuild your records, that cost a bit, but it won't bring your business down. The biggest exposure is if your system is used to perpetrate a loss on somebody else, and then you could be found liable, and that's where the dollars come in. All right? So it's not just the restoration of the costs.